Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, let's go over the market. Let's go over Tesla because my goodness was this a wild day. Let's figure out what happened, what we can expect moving forward, and all of that good stuff. So as usual, if you enjoyed, don't forget to hit that like button. It does help a lot. Again, this is not financial advice. I am not a financial advisor. My membership section is live where I share my intraday thoughts on Tesla as it moves throughout the day. The link is down below if you're interested for that as well. And now today we're officially switching over to TrendSpider. I'm still going to be kind of going back and forth for now, but I do want to switch over to TrendSpider. I have a link down below if you actually want to use TrendSpider, if you want to subscribe to it. I have an affiliate link if you're interested in that as well. I'll leave that below. But like TrendSpider is a pretty good website for charting, and there's several reasons why, and it's going to unlock a lot of other things I'll be talking with you guys about as well. But all that being said, Tesla pretty much down 10% on the day, closing at pretty much $262 per share, which of course compared to the market is a pretty severe underperformance. But even with that being said, the QQQ is still down pretty significantly, about just over 2%, which definitely isn't, little for, tech in general, right? Of course, the Netflix and Tesla most likely being probably one of the major reasons why, they are down, why the QQQ is down so much. Like Shopify is also down, Meta is down 4%. Like the market's actually pretty down today. I'm not gonna lie. Actually, I didn't even look at the other ones, but yeah, the market is quite down. But of course, Tesla with 10%, which is a pretty significant fall. Now let's figure out what has happened, right? So like I said the other day, right, we have earnings coming up, and it's gonna be a major catalyst. Again, I always talked about how I personally think that it's a higher chance for it to go down than up, mainly because it was so elevated. The earnings itself wasn't too bad at all. I think there might be a bit more short-term noise, in all honesty, for another quarter or two, for Tesla itself, the company. But I do think long-term is extremely bullish, right? Just short term, I do think there's gonna be a little bit more noise, in relation to margin, especially, which of course is the thing most people are paying attention to. But that's kind of the more fundamental aspect of it. TLDR, I think there will be a bit more short term noise. But moving into the technical and the chart itself, so you can see the most important thing here is the fact that we fell back into the overall massive channel ever since we were back at the $100 price range. Right, so the overall channel that we were kind of zigzagging in upwards so far, but another channel that we did fall under is going to be on the 65-minute chart. You can see essentially more or less this red line right here you can talk about, right? We kind of, went up throughout that as well. Or on the daily, right? This red line right here that we were kind of, channeling in, kind of, hugging the bottom of it every time we came down. So we bounced up, came down, bounced up, came down, bounced up, right? We kept doing that over and over and over, but then finally we did break pre-market, or I guess post-market after hours, due to earnings, right? And it went down pretty substantially, right? It was down about 4% from the earnings, then went down another 5% throughout the day as well, as people are taking profit, exiting, buying puts, shorting, hedging, whatever the case may be. Now the RSI, you can see, it's extremely not good, right? We've been talking about this bearish divergence for quite some time, and it's finally starting to play out, right? Like I talked about many times, right? Even here you can still see, right, the RSI is pretty much sitting at 50 on the dot, and that's a lower level on the RSI than when it was all the way over here at about $240, where the RSI sat around 57 roughly, right? So keep that in mind. That is pretty important to understand that, the RSI is falling substantially. Even though the stock is higher than the level it was back here, the RSI is lower. So, we're continuing the bearish divergence, and I don't think it's going to stop anytime soon. Now, this doesn't mean Tesla has to continue just plummeting. It can. It doesn't mean it has to. But, overall, I think the cool off has officially begun, right? This is going to be that cool off I've been talking about. Like I said many times, like, I don't know when it's going to happen. Maybe it'll go up even higher. Like, I don't know when it'll start, but when it does start, it will happen. It's not a matter of if, it's a matter of when. And the thing with red days usually is, this one red day essentially eliminated all of these candles that we were working on to move up in one day, right? That's how red days work, right? It's always staircase up, escalator down. For Tesla, usually it's elevator both ways. But man, it's truly an express elevator on the way down for Tesla as well, right? And that's kind of what we're seeing here with the solid 10% move to the downside, right? So that's number one. The volume is also extremely high. Well, not extremely high, but definitely on the higher end today, as you can see, compared to the average, right? So pretty high volume day as well. Now, one thing to note that's, what I like TrendSpider about as well, and that we're going to be using more often, is something like this, right? For instance, this is the seasonality chart for Tesla, right? So this shows how powerful, how well a Tesla stock in the past 13 years performs each month on average. Obviously, take it with a grain of salt, but you can see June, right, which was a phenomenal month for Tesla that we just finished not that long ago. It's probably one of the best months for Tesla, right? Meanwhile, July is pretty much a coin flip, right? August, kind of a coin flip, but then September is usually a bad month just for the market in general, but October is also a bad month for Tesla as well. So we're entering some pretty, not the best months for Tesla historically. Obviously, it doesn't mean it has to be red, because obviously if it was, then it'll be 100% red. You know what I mean? But the point is that they're not good months for Tesla, right? They're usually not good months for Tesla. And then, of course, moving into November and December, it starts getting obviously better. But so the point is, we're entering some turbulent times, right? And this is the perfect time for something like this to start happening, right? You have the MACD, as you can see on the very bottom over here. If you take a look, close look, right, on the daily, right? The MACD, as you can see, has kind of, curled into the overall negative territory ever since we did this little correction over here. And then as we went back up, the MACD couldn't even recross the green over the red, which is a bullish crossover, and it kind of got rejected by it, and then it did the exact same thing again, right? It did it twice, as you can see, and now of course it is pointing straight down and it's looking a little bit bearish, right? On top of that, we also have the 21 EMA. Oops, that's not the 21 EMA. This is the 21 EMA. That's also not the 21 EMA. My goodness, I'm pressing the wrong one. Sorry. There we go. This one right here. Right, we have the 21 EMA right here, which is sitting at pretty much roughly $260, almost $9. Obviously, we closed below that. That's not a good sign, right? That is obviously a pretty bearish sign, right? This is like a short-term kind of momentum indicator, I guess, if that makes sense, right? And closing below this, obviously, you can still recapture it tomorrow. I do have that kind of 2 to 3 day rule I've always talked about, and of course, it always plays both ways. So unless Tesla can recapture the 21 EMA tomorrow, which is almost $270, the chances of this trend continuing to the downside are, in my opinion, pretty darn high. So keep that in mind, right? That's not a good sign that we closed below that. We finally broke below this overall, kind of ascending wedge, if you will, that we were in this kind of red line right here going up. Finally broke below that as well. The Bollinger Band, we're pretty much right around the white line, so we kind of came back to that as well. So, there's a lot of things, not so good right now, right? The weekly, especially, the weekly chart looks hideous, right? On the weekly, you can see we did touch and actually kind of went above the overall trend line, the red line, right? And then, of course, we got a massive smackdown today. The weekly candle looks absolutely disgustingly hideous. Not a good weekly candle, like, whatsoever. So keep that in mind. That's not great, right? You definitely want to be careful with this if it closes anything like this looking tomorrow. But with that being said, we did approach one area that could be kind of a potential support, which you can see, we had a lot of resistance around this area, around this kind of, 260-ish area on the weekly. As you can see, we came up and got, 3 weekly candles that just couldn't push through until it obviously finally did. And now we're back right at that level. Of course, as usual, old resistance turns into support. And that's essentially more or less where we are sitting at right now. So I'll go ahead and put it somewhere around here. Right, and that's more or less kind of what we're sitting at. And you can see in the past, there's been many times where it's acted as a support and a resistance as well, and we're right back at it. So there is still a chance for tomorrow to be a kind of buy the dip situation, and it kind of fixes this candle and doesn't look as hideous as it does right now. But of course, we'll see. And if it does, I will continue selling calls. If you're wondering what I am doing, I am slowly buying this dip. Again, I'm not going extremely crazy. I'm about maybe like 20% in right now, 25 at most ish. And I still have the rest of it is all cash, and I will continue buying it as it keeps coming down in levels. And as I buy and reach 100 shares on a buy, I pretty much look to sell the call against that, because I still think the trend is all the way down. So I'm looking to hedge against those shares, and that's just my personal trading philosophy. That's how I like to do it. That's just me, right? And again, I'm not too worried. It doesn't keep me up at night, and I have no issues, right? I'm not worried at all about that whatsoever. So keep that in mind, right? That's something else to consider as well. Another thing that's kind of cool to see here is, it doesn't really show too much just yet, but is kind of this TTM squeeze, which uses the Bollinger Bands to kind of determine when the price is really kind of ready to squeeze. So whenever you see these red dots right here, that means that the price is kind of congesting really aggressively, and it's getting ready to explode one direction or another. We're not seeing that right now, which means that potentially this move to the downside should not be too aggressive just yet. And we might get some consolidation somewhere around this kind of level that we're at right now, this kind of 260-ish level. Wouldn't surprise me at all if we kind of go sideways for a bit. Maybe wait until more earnings come out, maybe Apple's earnings, things like that. So keep that in mind. It's not really showing any squeeze right now. So I'll be surprised if there's a much more aggressive move to the downside from here without at least some consolidation first, some build up, and then we maybe continue moving down even further, right? So keep that in mind as well, right? We also have another thing I like this platform for, that's very easy to use, is going to be the volume by price. Now this is important, right? So this is what I talked about in my membership section, right? Pretty much this morning, actually. I think it was like close to market open. I don't remember the exact timing, but it was this morning, right? And I pretty much talked to them about this volume profile, which essentially just shows you. So the bottom, of course, shows you like the volume of the day, right? Just how many shares total were traded. What the volume profile shows is how many shares are traded at what level. So in other words, what you can see here is the fact that, as we came up higher and higher, the volume profile became thinner, thinner, and thinner, right? But the point is, and I talked about this to my subscribers, essentially, at 275 is what I said. If we break down below 275, that's where I personally can see us, because that was one area of support that I had. But if we break it, I can easily see us coming down to somewhere around to 260, if not maybe a little bit lower, as low as 250. But starting with 260, and that's exactly what happened. We snapped 275 and we came right down all the way to 260. And the reason I said 260 is because you can see there's a little bit of a volume profile that really sticks out, which tells me that there's a lot of volume. A lot of people are buying or selling shares around this overall area between 260 to 250. That's a pretty important range for a lot of people, right? And it acts the same way as a support and a resistance, right? If you're going up into it, right, kind of like how we went up into it here and then had a bit of issues around this kind of general area, right? Because it acted as a resistance. And the flip is true. If you're coming back down into it as we are now, same concept applies. Now it acts as a support, at least in theory. Of course, nothing is guaranteed, but in theory, it should act as a support. And that's kind of what I expect to see happen right now, right? And that's what is so far at least kind of happening, where we get a little bit of a wick at the bottom. So, we are seeing that small little bounce off of that area. We still could, of course, go a little bit lower, like into the 250s. But in general, I do expect this area to be at least somewhat of a support. And for the most part, hold us here for at least a little bit, and then we'll see from there. But the thing that's a little bit scary is the fact that if we drop below 250, and especially drop below this kind of 240 area, that's where you can see it's extremely thin volume. Like, we pretty much don't have any volume in this area up until we re-enter the like 212 area. So essentially, if we lose 240s, in theory, it seems like, the very low 200s will happen pretty darn fast, like quite aggressively fast. So just keep that in mind. Just be ready for that. I'll be ready for that as well. I'll be ready to buy that dip, and I'll be continuing to buy this dip incrementally as it keeps going down, roughly about 10 points each time. I'm going to be buying it, and I'm going to be a lot more aggressive when it comes down to this level around the low 200s, like 220 and below is where I'm really going to be a lot more excited to buy. Especially my second account, right? I have my main account that I'm buying right now, like, here and there, here and there, here and there as it's falling. But then my second account is completely in cash that I will pretty much go much more aggressively in the very low 200s if we get there, of course. Obviously, I'm not sure if we will. I think we will, but I'm not 100% obviously. But I do think we will, right? Especially if the weekly candle closes anything looking like this hideousness, which is just really not good. Let's just say that. So you can see how much volume there is even on the weekly, right? In this kind of area, right? In the 200s. Now, anyway, that's kind of what I'm seeing. So let me know what you guys think down below. If you enjoyed this video, don't forget to hit that like button. Hopefully you guys will appreciate this new stuff that we have over here on TrendSpider. It's a pretty damn sweet website or charting tool. So I'd like to see that as well. And I think this will be quite useful for us. Yeah, they also have 65-minute charting, which is pretty sweet instead of 1 hour. Well, they have both 1 hour and 65, but 65 makes more sense because the market's open for that extra weird half an hour. So if you're doing 1 hour charts, right, you have that weird half an hour because the market opens at 9:30, closes at 4 Eastern. So you have like that weird sort of half an hour in a 1 hour candle system, which doesn't make any sense, right? So 65 minutes sort of averages that out much better, and you get a much nicer, kind of more fluid, range of motion, if you will, in the candles, which is also quite good. But on the 65-minute, essentially 1 hour, we are actually getting into oversold territories, which is why I also said that, this area roughly wouldn't be surprising if we kind of somewhere around 260 to as low as 250 get a bit of a bounce, but you really want to hold 240s. If we don't hold 240s, I think we're going to be going down to like 215, 210 pretty quickly. But yeah, thanks for watching. Pretty big day. Hopefully none of you are caught by surprise too much. But yeah, all that being said, thanks for watching, and I'll see you tomorrow. Peace.